When is it time to sell an underperforming multifamily property? I wanted to shoot this video. There's a lot of investors out in the marketplace that have underperforming properties. I've got one myself, and I was kind of going through some of this on my own and thought it'd be good to shoot this video because there's so many people out there right now that have underperforming properties. Doesn't mean they're bad properties, doesn't mean it's time to sell every one of those. It just means it could be time to reassess, reevaluate, and look at it as, should I continue to ride out the ownership of this property, or should I sell, divest, and do something else with the money? So in this video, we'll kind of walk through some of this. I'll share some of my train of thought, and hopefully this is good information for you if you've got a multifamily property in the marketplace and you're thinking about what to do with it. Hopefully this will help you through. So some deals deserve patience, right? There's been so many times, especially in the prior down market, I talked to a lot of owners and they just buckled down and rode it out. And a lot of them are really happy they rode it out because asset values and fundamentals appreciated and got better, and they were glad they held on. But sometimes you could have an asset where it makes sense just to sell. It's underperforming. There's a lot of other changes that might not come back, right? And might not get better. So you might need to look at getting a clean break on this. So first off, let's talk about what is underperforming. So when we kind of define it, we're looking at maybe you acquired a property and you're not getting the pro forma rents you were looking for. Maybe the market rents have softened. Maybe you've got no cash flow or razor thin cash flow and the yields are well below what you were hoping for, right? You could have seen just challenge with tenant quality, challenges with occupancy. Maybe you're operating at a higher vacancy rate than you were expecting or underwrote for. But I think this is a big one: constant operational headaches. There's always going to be some level of strain running a building. You got to work the real estate, but there comes a point where it's just like an overload. And if you've got a property that's underperforming, it's taking up a lot of time and provides a lower return on that time. It's not producing a good cash flow for the amount of strain you're being put through to run the property. So those are a lot of what defines underperforming. You might also see market shifts, declining areas that are deteriorating, new laws that are coming through, new rent laws, and then rising expenses, right? We're all seeing that on the insurance side, and that's been a real it's been a real challenge for a lot of folks. We're getting through it, but the numbers are real and it is affecting our cash flow. So those are the things about defining what is underperforming. But then when we look at it, a lot of folks that I've talked with, and it even kind of percolates into my own situation, it's just not financial, right? It could also be psychological, right? Let's look at that. What might come about being psychological? It could be, well, I've already put so much sweat, equity into this, blood, sweat, and tears into this property. I'm already so committed, I don't think, I want to sell, or I think it could turn around. Again, it might turn around or it might not, and you ultimately have to decide, but I don't want to sell low. Well, of course we don't want to sell low, but sometimes you need to look at, some of the realities and saying, okay, what else could I do with my time, my energy, and my capital? So some of those flags are, again, maybe those things you can't change. Maybe it's you've got a loan coming due and the numbers just don't pencil anymore. Maybe you've got fundamentals that have just deteriorated, right? So rents could be soft, but maybe you're in a market where maybe you got a really strict rent control and you can't grow your rents at the same level. Expenses are rising and you don't see that changing anytime soon, right? That could be an underperforming long-term challenge. And you might see some better opportunities that come up in the market that you could then put your equity into. So those are some of the things. A lot of people that are looking at buying assets are saying, I need to have room to grow the rents. I need to have an area that's going to likely appreciate in the long term. If you're watching this video and you're like, in the short term, my asset's not appreciating and I can't grow my rents, I'm already at market, then that might be a short-term challenge with underperforming. But if your area is getting worse on top of that, then it's might be a long-term underperforming situation. So those are the things you're gonna have to weigh. So what to do instead? A a lot of people, when I talk to them, again, it's not about selling. A lot of times I meet with, clients in the marketplace, investors, and they just want to kind of brainstorm with me and get my opinion. Hey, what would you do if you were me? What do you think? And a lot of times I'm not like sell. I'm not just broker, transactionally based. Like, yes, that's how we put food on the table for my family and our team, but that's not what I lead with. I put my investor shoes on and really sit and think about, what's best for the customer. And sometimes people need a little bit of a nice reality check, and some people just need a little bit of reinforcement as to hold on. But I would say a lot of times what I'm seeing is a lot of investors are overloaded right now, right? The goal's always been to buy more real estate, right? Nobody ever talks about, well, you own too much real estate, right? But that's something in the market is shifting. When you kind of start to go through a down cycle, there's times where you can kind of reflect and look back and say, what is the market telling me? What kind of things am I really experiencing right now that I might want to adjust my long-term strategy with? You might own too much real estate, or the wrong real estate, right? So this market cycle could be pushing you to simplify, trim the fat, focus on what truly matters in your long-term goals. But if you have never-ending calls, your team's strained, you're always getting tenant-related issues or stuff coming, just you're overloaded, you might own too much real estate. Or your team, you just might have too much for the size of your organization. So a lot of investors that are able to run a small little boutique group of properties and run them very efficiently, if you just added a ton of units to them, they would have too much. It'd be overwhelming, right? They'd own too much real estate for their scope and size of their team. So I think that's a big one. That nobody talks about that, and that was just something that kind of occurred to me as we look at what really matters, right? What is important. So again, not every deal that we acquire is going to be a home run. Sometimes the ones we think are going to do super well don't do as well as we had hoped. And some of the ones we thought were going to go okay actually outperform. So you really got to just reassess, kind of simplify and reposition some of your equity at times. And selling's not always, letting go or surrendering. It can be leveling up. So what would you do better with that money? You could consolidate a couple assets, trade into one property. There's a lot of opportunities to do 1031 exchanges right now because there's not a ton of 1031 exchange buyers in the marketplace. You could also sell an asset, potentially if your structure's right, you could pay tax, just depending. There's some people, I'm in this camp, where I could sell an asset, I wouldn't have a big gain. So I won't have a big tax consequence to where I need to exchange. I could just pay the tax, which would be very little, and then I could take that money and go pay down an existing property. And actually my cash flow would be equal or greater than, because I would pay down a property that has a over 5% interest rate on it. So if I paid that down, I'm making up increasing my return by that amount. So I actually might be leveling up with selling, trimming some of the fat. So assets that are out of your core area could be one reason where you could just trim the fat and sell those assets and double down on your core properties. And it doesn't have to be about buying. For my example, I could just be paying down a property. There's no more work with that strategy, and I'm making money. And I don't have to do one single thing extra in order to make that money. Now, I'll miss the opportunity if the market comes back rising. I could miss an opportunity of not owning more real estate and getting a lift. But I think running real estate, managing real estate, working multifamily real estate is straining a lot of folks. And I think that is a big, if we were to talk and go through things, that would be one of the things that I would look at. Some people have a team, they can acquire asset, throw it over their shoulder and just keep going and doing what gives them energy. Other people can't do that or don't have it set up that way. So it's straining. So that's why I would say, are you overloaded? How's your energy? Your time is your most precious commodity we have that is non-renewable. So just be mindful of what you're taking on and what you're aligning yourself with. So if you're not selling today, that's totally okay. I would help support you keep the assets you want to keep, but you are buying the asset back in a way with your time and capital if you're not selling. So look, I thought this was a good video. Hopefully somebody got a value of this. I get a lot of good calls from people saying, hey, I love the prior video. This is really good. Gave me some, kind of like a thought partner with these videos to where you can kind of bounce some ideas off or just absorb and help kind of make your own decisions. I've gotten people that have reached out to me, so I really appreciate that. And I'll keep doing them. And let me know in the comments below if you want another topic, what specifically you would like for me to go over. But I think it's really big on talking about properties that are underperforming and, really looking at what do we do next, right? What do we do next with our time and commitment? And if I can help reinforce your decisions so you can make the best decision with your real estate, I'm happy to be a sounding partner here. Reach out to me, reach out to our team, and we'll see you on the next video.